Good morning and welcome to today's edition of the London Session Open. Today is March 23rd, 2020 and it's 9:35 a.m. in London when we're doing this market update. We're going to take a look at the markets that we should do at this time of the day and see what's happening, and as well see if we can answer any of your questions. So it's question forward. Just put your questions in that little chat box here to your right. You can also just say hello if you're just watching. Now, if you are watching, don't forget to make sure that you like the video, and as well, if you are on forums or Twitter and stuff like that, you help to share by liking and retweeting the tweets that we share on the ATFX channel, but as well on the ATFX 00. As well, if you are interested in more of my content, then do follow me on Twitter on ATFX 00, and don't forget to subscribe as well to this YouTube channel. That's my Twitter handle. Okay, let's get going. So it's the same what we're saying over the last few days. So stock market is going down, dollar strengthening. So it's a lot of that continuing now, and also crude oil. And we had some good success. Crude oil went down exactly spot on as we wanted. As well, I think GBP/USD as well went down as we wanted it, and dollar yen is maturing into what we wanted to do. And then we have as well the DAX and all that actually did not trigger the trend funding levels I wanted. Instead, what happened is it just went down and reached the targets as expected. So as per the technical analysis, I was hoping for a bottoming out, but it did follow the analysis good. Because that's the thing, you know, like that's important. You know, you do your analysis, you try to stick with the analysis instead of just trading your opinion. Of course, sometimes you can trade your opinion and you get it wrong, because actually on the Nasdaq 100 I did have a bullish scenario, and that one did not really, well, that one did not work out. Now, if we're looking at the markets today, so this is the euro versus the USD, and the trend firmly remains bearish. There's no question about that. But the market is starting to consolidate, and we have created what looks like a small descending triangle with a double bottom here and then a lower high in reference to this one. You can just draw that trend line and you get what we call a descending triangle. And if we take out 106.31, then that should push price lower. Per the triangle pattern target, we can go down to something like 104.66. And what's happening now is just a shortage of dollars. So everybody just wants to get hold of dollars, and I said last time, I think it has to do, it's a lot of emerging markets where people have borrowed in dollars, taking loans in dollars, and now they're trying to hedge everything. So suddenly everyone just wants dollars, just because we're having this recession on the back of the coronavirus. Now, there's a ton of new deals between the Federal Reserve and a lot of the other governments or central banks. So dollars are being made available. And before it was just on Wednesdays, now they changed this to every day. So every day, if some of the banks in other places of the world that are not American banks need access to dollars, they can go to their central bank, and their central bank is going to provide them dollars from the Federal Reserve. But for now, the trend remains bearish, and you know, they put all this stimulus in, and if you think about it, you know, they're gonna give all this money, I think some $3,000 per family in the US, to give you an idea. In the UK as well, there's some support. Like for example, in my case, my child's nursery fees, we don't have to pay for them, and they're going to be, we still pay for them, but it's going to be credited. So effectively, we don't pay for at least a month or so here, and so you're seeing things like that. But the problem here with stimulus and fiscal policy and everything is it's supposed to, of course, help you with people with mortgages and stuff like that. But the challenge is here, people can't go out and spend because they need to be locked down, and that is why we are heading into this shortage or this problem. So my sister, for example, told me she works at a hotel, and everybody in Sweden, so everybody in the hotel effectively were made redundant last week. In Sweden, it's of course a bit different to many other countries, so she actually will be receiving money for about 6 months. So for her, it's not going to be a big deal in the short term, as long as things are sorted in 6 months from now for her. But yeah, so we're definitely heading into some sort of a recession, and we already know about this. And I think we need maybe more lockdowns, so more economic pain in the short term, and then after that, maybe things can bounce back. Because not everything is bad. There's people on, for example, LinkedIn, for example, have contacts in China that are publishing images from Shanghai, and you can see people on the street. Everybody's wearing a mask, of course, because that's what you should be doing. Of course, the reason the governments in Europe don't tell you that is because there's not enough masks for everyone. So I understand that. But afterwards, when things sort of lighten up, people should probably be using at least surgical masks, which are cheaper to work with and buy and more accessible, and you can do millions of those. And then that's what people are using in China now and Shanghai when they go out. But you clearly see people out enjoying the sun, and things starting to look back, coming back to normal over there. And I'm sure we're gonna have the same here. The thing is this: everybody just needs to take the responsibility, stay indoors for the next few weeks, and then we get this out of the system. All right, so technically here, with all that happening, probably more pain happening, like the numbers are increasing fast in the US, we'll probably see more declines here. And from a purely trading perspective, on a break to 106.31, I think the market could go down lower, and that's what I will be focusing on. The alternative is that we break this pattern on the other side, but this would be less of a good setup. But if we take this out, we can go up with pretty much the same amount, which is something like this. And we can probably go up all the way up here. But I never really trade. I don't trade these the move on a triangle like that. I only trade the horizontal bit. I don't trade the one with the section with the trend line. All right, here's GBP versus the USD. So last week we said look to sell here, and the market moved down nicely. The stop loss was here. It's now here. We reached down to support. If you book profits on Friday, good stuff. That's what I would have done. The market continues to be bearish. We continue to be in a downtrend here, but things are flattening out a bit here as well. But here I'm comfortable just selling on corrections, and as long as you're below 119.36, this is going to be a downtrend, and we can go up to maybe 118.05. And if we do, only if we do, from here to here, I'm going to be bearish. I don't want to be selling here because it's in the middle of the range, and if you're a short-term trader, then the reward is just not just there for us. Dollar versus the Japanese yen. So remember we're talking about this big Andrews pitchfork. Well, the trend remains bearish below 112.46. So the trend remains bearish here. We said we can sell here, we can sell up here. So if we do go up to 111.70, that could be the next spot, being bearish from here with stops just above 112.46. If we have a daily close, a breakout above that level, then we're probably gonna head higher. In the short term, if we just you know, hide everything for now, you can clearly see that we're still trading in an uptrend, right? But if we take out 109.20, then the short-term trend, at least the very short-term trend, would have failed, and we'll probably go down to 108, maybe 106.84. If we take a look at gold prices did bounce from the buy zone, and we're pretty much at break even now, maybe even a small loss, depending on your entry. This market is unfortunately forming a descending triangle, much like the Euro USD. You guys have support, and then downward trend line. Take out this high, and we're probably gonna go upwards. Take out the low, and we're probably gonna come down tumbling. So you want to keep an eye on 14.45, bearish below, bullish above, because I will continue to be bullish. And the reason why I was bullish here is just because if you look at it from a bigger picture perspective, you have a bullish trend about 114.29. So that is what I will be focusing on. Let me just check, by the way, if we're actually live. Yes, we are live. Good stuff. So let's move along here. Crude oil. So we had a bearish view here, and let's crash forward. The scenario from last week was to sell up here with stops here. We reached take profit level, so this is where you want to be booking profits, and we're just above support, and people bought here on 18th of March and on the 20th of March, and it's a double bottom to some extent. Obviously take this out, we'll have more panic selling, we go down a little bit lower, but my preference now is just to be selling, and to be selling on corrections. So selling at 26.50, This will be preference with stops just about 28.6. So no change to the outlook. It's bearish, reach profit target. You should want to wait for that corrective move. German DAX. So German DAX here, the idea here last week was take out the high, we turn bullish. Don't take out the high, and we're going to go down. We went down, so we reached a good little spot to book profits as the market opened for the new week. So I would have booked profits here if you haven't done so already. Looking at this today, it's quite clear that we have a head and shoulders with a head, right, and left shoulder. And if we take out this level, we can go up substantially by a good amount. We can go up maybe all the way up to 10,404. So that is what I'm looking for. The alternative is we take out 7,934, which is to take out the head, and we can go lower. There's also something called a failed head and shoulders. And when we take out this level here, that will fail. But I'm waiting for the break to 7,934 before selling here. The alternative is if you're really, really bearish, then you can do what we did last week. And last week, I just had this little spot, if you remember. We just had it like that, and we said, look to sell for it to go down. And that worked out good. Okay, so. Okay, I think you know what happened just there. One of the issues with the shutdown of London is that there are no nurseries right now. So my little son came in, he's 2 years old, so he doesn't understand the whole thing. And he gave me a bit of small pizza slices. Sorry about that. Anyway, a little bit of interruption. I'm sure you guys have kids at home, most of you, so you know the situation. Okay, so moving along here then, and if we look at the S&P 500, the S&P 500, the idea here from here was to be bearish below 25,590, and the idea was to sell here for it to come down. Well, it came down tumbling, and this is a good spot to book profits in the very short term. Looking at it from a big picture perspective, trying to figure out what's going to happen next, then I'm going to be bearish below 2,337, and as we swing back up here, we go back to the lows, and from here I think people are going to look to be interested and look to short sell, and that is the outlook for the S&P 500. Let's just take a look at Bitcoin. So Bitcoin, I haven't really watched it because it sort of tumbled, and my preference is just to trade on the bullish side of things. I don't like to sell Bitcoin because when it goes against you, it can go against you dramatically. But Bitcoin is within this big triangle here. The market did receive some support here. Some people did want to buy here. And, you know, from a bigger picture perspective, yeah, okay, maybe one could buy here if you really wanted to for a test of the trend line again to maybe up to 10,000. But we had a little pattern here, and that was all. You got a small, funny looking, well, not funny looking, but you had a bit of a triangle pattern or something like that here, like that. Or if you wanted to, you could ignore this one and say this head, left, right shoulder, and you had that little move, but that was pretty much it. We reached target, and then that was it. Looking at this today, I think I don't have a strong view here. In fact, I think it's too early to do anything. I think what we're dealing with here is sharp decline, sharp rise, and I'm probably going to spend some time down here. And if we do spend some time here and we get a nice little pattern, then we could probably maybe target the upside again. For now, I'm pretty much neutral on this one. I would not have a strong view. Okay, let's see if you guys have any questions. So Nikos is telling me, good morning, Alex. Greece is under lockdown. And we have VS, good morning, stay at home. And we have Ugo as well from Portugal saying good morning. Good morning to you guys. Thanks so much for joining me this morning. I agree. It's time to just take it easy. And I was looking at this, I'll show it to you. So if you're looking at the latest Italian cases for yesterday, cases were jumped to 59,138 cases in Italy. And the new additional cases was 5,560. Now this is good because this is, well, it's a lot of people, and I don't say that this is good, but I mean from a sort of macro perspective, big picture view, this is good. To begin with, is a decrease in number of cases. I know it's just one day, but what's also even more important and is hidden is that the daily growth rate has now reached 1.8. So it's pretty much been some, well, it's been some 12 days of quarantine, 13 days of quarantine, and they quarantined on the 9th of March. And as I said before that, you're looking at a growth rate of 26% per day almost. Following that, the growth rate has declined to 15.7, and then just the last 4 days, the growth rate is 13 and a half. But let's make it simple, 10.4 by 26. So we're only at 40% of the growth rate as we had it from before. And we lost about 60% of the momentum here, which is really, really good. And the way this extends, I think, you know, they put even more measures now, as far as I can understand it. They're going to shut down non-essential factories. So this, surely, I think maybe by next week, if we just use some simple regression here, then by 1st of April, we're going to have a growth rate of like 6%, which again, very, very low numbers. And it tells me that things are coming under control in Italy. I'm not sure how life is going to look like afterwards. They're surely not going to release everyone. They're probably going to implement some stuff. Of course, they're going to mess it up as well. They're not going to be like the Chinese, where you have a thermometer. Every time you go into a building, they're going to check your thermometer or your temperature. Everybody wears face mask. I don't think it's going to be like that. But there's going to be some sort of back to normal, I think, afterwards, when they have contained it. And we definitely bought some time here. And for people to the health system to get things under control, and then as well for the companies that develop vaccines and good medicines against the virus. The other thing as well is that what we want to keep an eye on is actually the US. So the US is having an increase of cases, and they're actually on number 4 now, but just because it's such a big country, and also because they just started to lock down properly now, this number is going to go probably to maybe 150 or something like that. So this, I think, is probably going to go upwards. And again, things are starting to slow down right now in the US, and this is going to slow down further. And then eventually what's going to happen, I think that we're going to see a stabilization here as well. I think people are going to start to take it more seriously, and I think we're going to get things under control. Now, what's interesting is this. On the TV, they're still going to talk about how the numbers will go bigger and bigger and bigger. And it was the same thing here with China. People talking about the numbers being bigger and bigger and bigger. However, from a stock market perspective, things bottomed out quite quickly. And the last move from about, I don't remember exactly, from maybe 40 or 30K up to 80K, from a financial market perspective, it was largely ignored. And I think it's going to be the same thing here with the US. As soon as we start to look at the growth rate, to start to slow down, that's the important thing here. But we're not there just yet. And I think when that happens, we could go back to normal, and maybe some of the correlations, so the super strong dollar will abate at that point, I suspect. Because it's going to be interesting to see as well what's going to happen. Because remember with China, so the market had already declined so much when the China PMI were released, and it was the worst number for a long time. so forever actually, because that index has not been around for too long time. It's been around for maybe 15-20 years, something like that. So it declined to the lowest level ever. However, at that point, stock markets actually ignored that data and they were bullish for a day or two, and then they started to go down because of the situation in Italy. And it's the same thing here. Like, we need to know, though I don't know for certain, but we need to check. But it could be a situation where your non-farm payrolls will be negative 200 or negative 300, but the markets do not necessarily trade lower because they have already moved down. We need to remember that. The reason why we're moving down so much aggressively is because we're having this complete halt to the economy. Nasdaq down being 32%. And that's the thing. Okay, so we got a question about CAD yen. We're gonna focus on that one, but then I need to leave you guys. So this is the CAD yen, and the CAD yen, this is an old outlook I produced. So the CAD yen, the Canadian dollar, because of the situation with crude oil, is obviously suffering. And we have this break here, move to the downside, and we're overall dealing with a downtrend. If we look at this from a 4-hour perspective, it's quite clear you have this level here, which is 7,884, and that's just above these highs. And if someone said, Alex, you need to put a position on, then I would say, okay, it's going to be a bearish position, and I'm going to look for something like that. Okay, guys, I'm going to wrap things up. I'm sorry for that. I have a meeting in exactly 3 minutes at 10 o'clock, and that's going to be ongoing for quite some time. But guys, thanks so much for joining me. Omar, thanks so much for your question. I hope to see you guys tomorrow for the next market update. Thank you, and bye-bye. Cheers.